Um,
Sorry, I'm choking on air.
it's okay. I will probably be coughing and just headachy throughout most of this, but we're gonna get through it together, Austin. That's the important thing, is
Yes,
that we're
because
here for each other.
I super prepared for this.
I have done extensive research. I am uh full of just extreme knowledge. I'm gonna say just knowledge to the max, if you will.
Extreme knowledge. That's what we look
Uh huh.
for.
Like
Uh,
I got it off the Mountain Dew Wikipedia.
nice.
That's where you go for all your extreme knowledge. Uh,
Yeah. So a lot's we did a Stonks panel at E5, I think, or maybe E4. I can't remember.
yeah.
I think we did an E4 one. No, we did one last year. Yeah,
I
because we were
think
talking about GameStop mainly.
yeah.
And oddly enough, here we are a year later, and we're probably still going to be talking about GameStop here, um, because I think a lot of people thought the story was over, and we're still here. We've gotten a lot of info in recent weeks. There was the shareholder meeting a couple of weeks ago, where it was announced that like 56 million shares were represented out of like 75 million. The takeaway here is that they call us meme stock investors, but really what we are just individual investors who have pooled our assets together and effectively have taken over the shareholder base of GameStop. Uh, I call us the players. Some people call us apes. I don't really like the whole ape thing, but I understand that like the concept of solidarity is there among GameStop shareholders. We do view this that we are in this together, and this is the way I've described this movement. It's like Occupy Wall Street, but it's working.
Yeah.
So yeah, we're well over a year into this, and I think a lot of people did not expect GameStop to be above $100 a share right now, and it closed this week at 135, and that's in the face of a recession and inflation and all these things that are hitting them. A lot of companies are struggling to grow revenues right now, and they're issuing disappointing guidance and whatever. It's not really the case at GameStop. They're growing revenues in a recession. They're taking market share away from other companies, right? They're taking share away from Amazon. They're taking share away from Best Buy. Uh, they're also entering the NFT space, which you could argue is a horrible timing on their part, based on the crypto crash and the popularity of NFTs kind of waning. But my point has always been about that. That's all incremental revenue that didn't exist last year. Same thing with them selling laptops. Same thing with them selling GPUs and all those things. GameStop looks very different than it did a year ago. If you just go to their website, if you go to the store, if you use the Chrome extension for their GameStop wallet, this is a very
Well,
different company.
I'm now I'm curious. Like you mentioned, like they're going into the NFT market. Like how much, if like, how difficult? I guess how difficult is it, and what kind of a financial burden is it to do something like that?
It
Like,
cost them it cost them money, like several hundred
yeah,
million dollars to do this. But it's kind of like once it's there, like once it's online and people are able to transact on it, I don't really know a whole lot about crypto exchanges, so I don't want to say that I understand everything about them and the expenses of running one. But I imagine it's higher margin than anything else GameStop does, because they're not creating the content. They're basically just the merchant of the content, right? So
yeah,
they don't have to put a whole lot of money into that. Immutable X, partnered with GameStop, gave them $100 million to fund NFT projects. So in the past few weeks, we've seen a lot of NFT uh, creators, if you want to call them that, which I think is a fair thing to call them, uh, announcing that they're going to be launching products on the GameStop NFT marketplace. We're in this weird place right now where they did like a soft launch of the Chrome extension. The GameStop Wallet app does not exist on either App Store or Google Play. They have announced their intentions to have one on App Store. So we know that it's coming. So we're kind of in this in between place where I won't be able to tell you, oh, this is the amount of profitability that I see from this specific revenue segment. So we're not there yet where we know just how much it costs to operate versus just how much they're making off of it. But one thing I did notice, and this kind of informed how I think they're going to be treating crypto and why it doesn't really matter what happens to crypto for them, because it seems like when they receive digital assets, either crypto or mainly Ethereum, they seem to be liquidating it pretty quickly and turning it into cash, right? So if that's the trend for them, this is just positive cash flow from operations that didn't exist a year ago. And I think that's going to be interesting. We're probably not going to get a good read on this for 2 quarters, right? So not this upcoming quarter, but the one after Q3 of their fiscal year. I think we'll get a good idea of what the margins are on the NFT
Yeah,
marketplace
and
and if it was worth it.
honestly, I know everyone talks about how the market's dwindling and everything, and like, yeah, there's been like a big drop in the value of cryptocurrency recently. Um, but there's still interest there, and like the thing about it is like I remember when Bitcoin first became a thing, then it blew up, and then it went back down, and then it blew up again. So like
Mm.
I think that the crypto market fluctuates a lot heavily, and I think that it's intertwined with the NFT market, right? So
Sure.
like I can see them potentially having those same sort of like massive upticks and downticks.
Um, yeah. I will say that what is going on in the crypto market in general, uh, it seems to just be what happens when excessive risk taking takes place. I was talking to one of my friends last night about it. There, well, there was, I don't know if there is, but there was a record amount of margin being used to buy crypto. I've seen stories of people using reverse mortgages to fund crypto purchases. People are using credit cards or were using credit cards earlier this year, late last year to buy crypto. Um, you see that kind of excessive risk taking at the peak of bubbles is my point. Everyone thinks, if you were to ask the average Bitcoin bull last year where it was headed, they would tell you 100,000 a token, right? And now it's at 20. So I think there was like, and I don't mean to offend any crypto people out there, but there is a cult mentality of the Bitcoin maxis, as they call themselves, who think that Bitcoin is the way and it's going to take over as the world reserve currency and all those things. Uh, I think that those are just talking points used to trick people to buy into a certain thing. So yeah, there has been a huge hit to the crypto market. What I think is interesting, and a lot of our colleagues across other outlets like to say that the NFT market is down X amount since last year. While that's true, it appears to have bottomed out sometime in January or February, and it's actually been on an uptick when it comes to just transactions and revenues in the NFT marketplace. It's mainly OpenSea right now. But yeah, it as long as crypto exists, I think NFTs will exist. So it doesn't really matter what your crypto is worth. And honestly, it might be better to own an NFT than a cryptocurrency right now, because at least it is slightly more scarce than however many tokens of Bitcoin there are. Uh, but yeah, getting back to GameStop and the timing of this, it might be a situation where crypto will bottom out sometime this year or next year, and if their mentality is we got Ethereum on our balance sheet, we're going to sell it, turn it into cash. It's like I said, this is a new cash flow stream for them. Like whatever the margins are, it's cash that they weren't receiving on their income statement or on their cash flow statements last year, and that's what the stock market's built off of, is year over year comparisons, right? So you have these companies like Apple, for instance, or um, just pick, Amazon, right? These very large companies that had record years, either in 2020 or 2021, that are now facing very difficult comparisons. Adding to that, wages are going up, right? Inflation is here, logistical costs are going up. that all leads to lower profit margins for these big conglomerates, these big multinationals. So I think there is a um this is not the Suda stream, sorry. You are a little
Just
late for
missed
that,
it.
but you could let me get this
We got a
fella
link to
the
it.
we got a link to it somewhere.
Yeah.
And thank you once again to Suda for participating in that interview.
So fantastic. That was so great. Awesome. That was a really good
Yeah.
time. I'm really
Yeah,
excited we finally got to share that with everybody.
yeah,
Yeah.
that was really fun. A lot of this was pre-recorded. This is live,
Yeah.
as you can tell by me reacting to you or original Outcast. But yeah, we're in a really you did miss it, but we just
We
provided
just
you a
got you
link
the
to
link.
it.
So
See,
you should.
there's a VOD there on YouTube that you can watch it at your leisure. But yeah, the what I think's really interesting about GameStop recently, the borrowing rate for shares to short across the board, regardless of what platform you're looking at, interactive brokers, um, all these things, it's skyrocketing because of what I said at the beginning of this conversation. How GameStop's shares, the float, has effectively been taken over by the players, by the individual investors. We've pooled our assets together. If you look at us as one entity, um, yeah, we linked it to you twice. But yeah, there is a like we've taken over the float, and then there's a large amount of them who have directly registered their shares with computer share, which makes them even harder to lend to short sellers. So there is this effective squeeze going on because we're not selling, right? Ryan Cohen, who owns almost 12% of the company, the chairman of the board, he's not selling. Other insiders aren't selling. Uh, so there's really not a whole lot of shares to go around for short sellers to buy to cover. So when you do have these moments like this week, I think it's important to note this was a very brutal week in the stock market, right?
We
Uh,
we're officially in a bear market. That's what they're saying now.
yeah, that's what they like to say. Yeah, the S&P 500 this week was down 6%. Blake, how much do you think GameStop was down this week?
I think it was up. I'm gonna guess it
It
was up.
was. It was up 7%. Sorry, it was up 7.2% this week. So that's almost a direct inverse correlation, right? But the thing is, you know, all stocks move uh, with the market. So earlier this week, GameStop got crushed. It was below last week's low. It traded as low as 114.3 per share, uh, only to close at the high of the week around 135. So why that happened, at least in my opinion, is if you're short GameStop, you're probably long something else against it, right? Uh, Gabe Plotkin and Melvin Capital, the hedge fund that we killed just last month, actually this month, uh, it was almost like an inverse me. He went long Facebook in the 300s, and you know how that story turned out for him. The stock dropped 40% in the first quarter. So his long got blown out after GameStop almost killed his whole fund in 2021. He got a $3 billion cash infusion from Citadel and a couple other investors, I think 0.72 or whatever. And they basically lost another 50% of that money. So I'm like, what? Like, what's it going to take for hedge funds to get out of their short on GameStop, right? Because it's becoming really interesting, Blake, because the short interest, if you believe Yahoo, is somewhere between 20 and 30%, right? But if you factor in all these other things like the directly registered shares, the players, Ryan Cohen's stake, it's not a whole lot of shares to cover. And that's why the borrowing rate's going up on top of the Federal Reserve increasing rates, right? So the risk-free rate of return that everything is based on in the stock decisions are based on in the stock market is usually based on the 10-year treasury, the yield of the 10-year treasury, right? That's been going up a lot in the past 2-3 years. It's gone from almost nothing. It was almost 0% at the height of the panic in 2020, during the shutdown in March. It is now, yeah, so that was down, that was right here, right? March 13th, we saw record low yields for our lifetime, right? Our lifetime, Blake. The past 4 decades. Interest rates for borrowing in the United States were the lowest they had ever been. Look at this since then. It's been going up. So yeah, this affects every financial decision. This affects the valuation of every stock in the market. Anyone who invests based on PE ratios, which is price divided by earnings, to have a equal playing field for looking at stocks, that premium being attached to stocks is shrinking right now for several reasons. The risk-free rate of return is going up, but also, like I mentioned earlier, margins are going down. Apple had like 42% margins or something in the past year, which is insanely good. But combined with their logistics problems, probably having to pay out the what for chips right now, I could see their margins decreasing. The other thing that could cause their margins to decrease is if they do release a new product. There's been a rumor that there's a headset coming out from them, a VR headset or an AR headset. If that happens, you're going to see a huge spike in R&D expenses and a few quarters where they might not beat on earnings. We haven't seen that yet, so I'm not entirely sure that we're going to get a VR AR headset from Apple this year. But even without that, there are a ton of margin pressures for these big established companies right now.
Yeah, I feel like that VR headset thing is something that everyone has been swearing is coming at the next keynote for like a couple of years now.
Mhm.
Like they're all
Yeah,
expecting to get, but I don't honestly. I think Apple is looking at it and like doesn't really see it as that viable right now. I think it's like I mean VR is still in a very like infantile stage, to be
I feel
honest.
like
Like
Apple won't release a headset unless they're certain they're going to make money off of it.
yeah,
And what we've seen in the last year, as Meta has become more transparent about they've broken it out into Facebook Reality Labs revenue. That shit is not making them money. In fact, you every time someone buys a Quest 2 from Meta, you actually are hurting their earnings for the next quarter. Because there's the ZeniMax lawsuit that I don't know if you remember. They basically stole a lot of IP, uh,
yeah.
and they had to settle. But part of the settlement was that each headset they sell, they have to give a cut to ZeniMax. There's just the overall price being very low. I think they're selling the Quest 2 below what it cost them to make, even before factoring in the ZeniMax lawsuit. So yeah, if Apple's sitting there watching Facebook fumbling around with the Quest line, I don't think there's any reason for them to rush to do anything there at all. So yeah, I do think that like things like that tend to be a red herring. Also, like the Apple Car, right? Like that's been talked about for what 4 or 5 years now. Maybe even when Steve Jobs was still alive, they were talking about making a car. Uh, it doesn't seem likely that we're going to hear anything about the Apple Car in the near future, right? But yeah, getting back to GameStop, the I'm pulling up this chart just to show you how volatile the year and a half has been since the events of January 2021. Uh, obviously there's a down like what I'm showing you here is a broadening formation. There's a series of higher highs and there's a series of lower lows. And obviously there was this lower broadening formation here. We've bounced off of this several times. This is a little bit of technical analysis here. And each time we do, we have these massive volume weeks. The week of March 25th traded 65 million shares. Uh, we traded 35 million shares on May 27th. You'll see that we have these big ass green bars that appear over time 30 some million. Conversely, you look at when we're selling off 11 million shares, 10 million shares. These days where GameStop gets hit really hard, they're only doing it with a million and a half shares, right? And it has told you the float's 76 million shares. I'm not selling. You're not selling. Ryan Cohen's not selling. There's a very small pool of shares that are trading every day, and the market makers can tank a stock right now. This is true of any stock in the stock market. They removed the uptick rule, which was a rule put in place, Blake, after the events of 1929. The Great Crash. and the Great Depression,
People
they
like
put
jumping out of windows.
they put this rule in the market to prevent excessive selling, excessive short selling. And in 2007, George Bush and his administration removed that rule. You can go look. You know what? I'm just going to pull it up. I can do it for you right now. Here's a chart of volatility. Let's look at a chart of volatility since 2007, Blake. That's it. We've had two of the highest peaks in volatility since the repeal of the uptick rule. Two of the highest. Look at this. Like, you're talking about. Let's see if this chart goes back to the 80s. Yeah, so the highest ever reading on the volatility index was during Black Monday in 1987. The VIX traded for 172. But you can see that even the tech bubble crash, the VIX didn't get above 60 then. In the last 15 years, we've had two readings on the VIX above 80. Those are the only two times in history that's happened outside of Black Monday in 1987. And we weren't really measuring VIX back in the Great Depression era. My point is that stocks are more volatile now than ever before, and it's the fault of the SEC for repealing the uptick rule. Sure, since the crash in 2010, I don't know if you remember, it was called the flash crash. Stocks all tanked the same day. This was during the you remember when the oil spill was still going on in the Gulf, the Deepwater Horizon explosion? That was going on for a month, right? There was a Greek debt default that happened, and people were really concerned about that. So it caused this panic, and because 90% of the volume in the stock market is governed by computers that are plugged directly into it, trading on algorithms, they all got a sell signal, and they all sold at once. You had stocks like Procter and Gamble that traded for a penny that day. Apple saw like a 40% drop and then a rally. Between high frequency trading, the repeal of the uptick rule, and this idea that we are allowing trading houses and analyst firms to exist under the same umbrella, it's a trifecta of corruption and rigging of the market. To make matters worse, you saw what they did to GameStop in January of 2021. They literally shut off the buy button. They shut it off because we were about to bring down the entire stock market with one stock. This is so I'm not listing all these issues off because I just want to complain about the market being unfair. I'm letting everyone know this is what we're fighting against as the players in GME. We see the corruption on Wall Street and we're sick of it. We saw what happened to us in 2008. We saw what happened to our parents in the year 2000, right? And we're sick of this shit. We're sick of it. And it's very rare where this kind of movement works. But I have to say, GameStop, and I was going to write an article about this, but I'll just say it here. GameStop has brought together Americans better than any politician has in the last 20 years. It is the most diverse group of people. Every race is there. Every gender is there. Every political background is there.
Yeah, that's kind of it's extremely interesting because it is such a broad stroke of individuals.
Well, we all get
America.
it.
Yeah.
It's us versus Wall Street. It's as simple as that. It's anyone who's sick of Wall Street versus Wall Street. And then the suits, they label us meme stock investors. This is not a meme stock. GameStop is not a meme stock. I'm going to just throw it out there. GameStop is single-handedly the best fundamental investment ever made. If you bought GameStop at $2 a share, you were buying it because you did not think it was going bankrupt. That's why you bought it. You were making a bet that this company will not go bankrupt. It was shorted above 100%, which should be illegal. That should be illegal. Why did that happen? Why did they let GameStop short interest exist over 100% for years? Why did they let that happen? If they couldn't handle one day of us buying the stock, why did they let short sellers sell it over 100%? It was just free money for them. And it's that right there. That sentence I just said highlights just how this stock is at the dead center of the corruption on Wall Street. Like, regulators could have prevented this from happening if they actually held market makers, brokers, and hedge funds accountable. And they didn't. So that's what we're doing now. And every time they tank the stock, it just pisses us off more. And I keep buying shares. When I think it's cheap, I buy more shares. Right? And that's what everyone's doing. And it's a very small grassroots movement where like people are, maybe they only have $100, maybe they only have $200 a month. They're putting $100 into GameStop. They're putting whatever they can, So slowly but surely, we have taken over the float of this company, and it's because we believe in their transformation. And props to GameStop for actually raising money. They transformed their company. They could have fucked this up. They could have fucked this up big time. If they didn't, they recapitalized their balance sheet. They paid off all their debt. When I was talking about the risk-free rate of return rising, the fact that GameStop has so little debt on their balance sheet is one of the reasons why I like it so much. Is that they have a line of credit of $500,000 that they can, or sorry, $500 million that they can tap into that they haven't yet. But outside of that, they're talking about a $9 billion company with about $6 billion in sales last year. Not profitable yet, but spending for growth. They've built a fulfillment center. They've built warehouses. They're obviously working towards improving their same-day delivery. They're working with DoorDash for that right now. But they are they're flat out a different company than they were in 2019.
That DoorDash thing pops up. Like, I have access to that now. I almost used it to get a new controller for my PS5 the other day. I'm gonna try it out. But yeah, no, that's insane. Like within it, like same day delivery service from a video game store / retailer. Like I could just be like, "Yo, bring me Pokemon cards," which is just as dangerous as being able to get Outback Steakhouse delivered.
Yeah, seriously, it's being able to buy Pokemon same day delivery Pokemon cards is as dangerous as buying Bloomin' Onion on demand. I agree. Man. But Bloomin' Onion, delicious. Pokemon cards, also pretty delicious at times, especially when you get a Charizard. But it's really weird. It's really weird to like sit here, and I get it. People fucking hate GameStop. They hate the old GameStop. I get it. Like, and I've talked to employees there. I've talked to people who, have had to work with the company in the past. It's a different company today. It's just a different company today. Anything, your beef with GameStop from 5 years ago or 10 years ago shouldn't really apply to this company. And I think we're watching a company that's transforming right now. It's in an industry that is the largest entertainment industry in the world. It's bigger than movies. It's bigger than music. It's bigger than television. So it's kind of dumb to me that people are still bearish of this company right now.
Yeah, no, I agree. I feel like GameStop really did try to go. I thought it was going down. I remember talking with you about it like before all this shit went down with the stock. Like, I was like, dude, GameStop is dying. Like, I don't think they're gonna be around like in another year. And it was like at that $2 point, It
was the timing of the console releases that may have saved GameStop. If Xbox Series X and PS5 doesn't come out in the fall of 2020, it's very likely that GameStop wouldn't have had the revenue to pay off their debt.
I think acquiring ThinkGeek was a really smart move too. But I think it was the wrong idea to shut down the brand.
They mismanaged it. They completely mismanaged it. And that was George Sherman and all of them. Like, it was a smart acquisition that they completely fucking...
they blew it. But it's also, like, I think one of the problems there is, like, ThinkGeek actually manufactured some of their products. Mm-hmm. Right? Like, there were a lot of things that were ThinkGeek exclusives because they were being, like, made in-house with licensing agreements. So, I think part of why they killed the brand is because like that's like manufacturing overhead costs, things like that. It was
also real estate. It was also I can tell you at the GameStop I don't think there is one in a mall anymore. But the one, I guess it was in Houston. There was a GameStop across from a ThinkGeek.
Yeah.
And it's like, I get why you're shutting down one of these stores. And a lot of the ThinkGeek inventory went on to GameStop's website and also GameStop stores. But it is a very, very strange decision to completely kill the brand. I agree with you completely. Because I will say that collectible revenue is the fastest growing revenue segment at GameStop.
Oh yeah.
Hardware revenue dropped actually year over year in Q1, mainly because they couldn't get enough PS5s and
Yeah. Where do you
Xboxes.
get that shit? Exactly.
Yeah. Yep.
Yeah. Johnny Chuck
Uh,
says if you say some form is more important than the movies too loudly, AMC's Adam Aaron might appear out of nowhere to try and sell you movie tickets and popcorn for cryptocurrency.
yeah. I mean, I don't want to drag AMC shareholders any more than they get dragged. Um, I'll just say this: if you want to make an investment, I'm not going to judge you for it. If you
No.
have a thesis, stick to it. If you think that, let's just say, if you think any other stock is going to go up because of what's going on in GameStop, you're wrong. That's just incorrect. Um, GameStop is a very unique story. It's a turnaround play. I don't think there's anything going on at AMC that is similar to this. They're sticking to their business model. They're selling popcorn in stores, which is not a high margin business. And yeah, Adam Aaron is a crook who sold most of his shares at higher levels. So yeah, I really think that the I don't want to use even the phrase, but the companies that are described as meme stocks, BlackBerry, Nokia, AMC, yes, they all had high short interests. Most of those were covered. Um, AMC diluted their shareholders almost 5 to 1, so they issued like 400 million shares when there were 100 million shares outstanding. That's a lot. Like they have severely impacted their earnings profitability going forward. Like the PE ratio, if they ever do turn a profit, is going to be lower than it ever was before. I don't know what it's worth. But yeah, like these
But hey,
piling into so-called meme stocks instead of GameStop has hurt this movement immensely because there's a lot of people who are new to investing that see a stock that's optically cheap. The per share price is low. So they think, "Oh, um what's a good example? I guess BlackBerry's still a good example. BlackBerry trades for $5.23 per share. GameStop trades at $135 per share. That means BlackBerry's cheaper than GameStop. That in some people's minds, that's how they think. That's not how you value companies. You have to value company if you're a fundamental investor, which like I said, that's what GameStop is. It's an investment based on actual due diligence about the short interest, the company's profitability, its cash flow, and the ability to turn itself around. And also just a more broad bullishness on the entire video game industry as a whole, right? Like I believe I've said this many many times. I want a comic book store and I want a video game store. We can't live in a world without either of those things. Like we have to have a comic book store and we have to have video game stores. I don't want to get all my video games from Walmart. I don't want to go to Target to get my video games. I just want a place that maybe even has someone who's remotely knowledgeable about video games behind the counter instead of someone who just has the key that they unlock at Walmart. Um yeah, and also Walmart customer service kind of sucks. So yeah, I think that there is that's like at the core, right? There there are people who believe in video games as a medium, and GameStop is really a pure play on investing in the commerce around the video game industry, not necessarily the industry itself, right? There's great companies that you can invest in, like Nintendo, which I own, or Sony, right? Or even Microsoft. Like Microsoft has had tremendous gains with Game Pass and stuff. There's a lot of stocks out there that you can invest in, but it's almost like GameStop, no matter what game is selling well, they're going to benefit from it as long as they continue to take share from Amazon. I think people are moving away from Amazon because, to your point earlier about same day delivery, How many times have people ordered from Amazon only to get that email saying, "Hey, it's not going to be there for launch"? Happens a
Yeah,
lot. And
yeah.
that's every time it happens, it sucks. And every time it happens, you lose customers. And it's
Well,
not just
it's
video games. Amazon's having problems with a lot of logistical things like that.
yeah, but then the nice thing too is it's not like they are paying for a workforce of delivery people. They're teaming up and basically outsourcing it to DoorDash, probably for like, and DoorDash charges, even if I have like the $10 a month DoorDash thing to
Mhm.
save on delivery fees, and even then they charge a $2 delivery fee, an Oakland fee, and then there's like another, like they throw like some taxes on top of that, on like on top of the delivery fee, even without that. So they're banking like $3 for doing jack shit and making somebody else like pay for their own gas and delivery.
Yeah,
Already like DoorDash, to always tip
which
your
is
DoorDasher
yeah,
unless
which is
they're
different,
absolute.
which is definitely different than the Amazon model, right? So it's like they're doing something different here,
Yeah,
and I don't think they get a lot of credit. You have to remember that the team that Ryan Cohen brought over to GameStop is largely ex-Amazon people and ex-Chewy people. And Chewy is a company that has killed it when it comes to online logistics, and they've done what we're talking about. They have created a niche for themselves where they compete with Amazon. You can buy pet food on Amazon. You
yeah.
can buy pet food at Walmart. Why are you
Well,
going to Chewy? Because Chewy gets it to you faster and it's exactly what you want. And like even with Lola, like she has prescription dog food that she eats. They were able to use the prescription and order it for her at a point in the pandemic where my vet couldn't even find the food. So like I think that there is an expertise in e-commerce on the board of directors at GameStop and kind of in the executive C-suite in general that people are sleeping on entirely. They've spent a lot of money on SG&A, selling general and administrative costs, because they've been hiring. They're hiring experts in all these different places, right? And then they hired experts in blockchain as well. So we'll see if those hirings pay off or not. But I can tell you that we're already seeing the logistical benefits of GameStop's, I wouldn't call it a pivot, but it's their recommitment to being a website and an app outside of just a brick and mortar store. But
yeah.
yeah, I leave this chart up here because I'm going to pull up a yearly chart. This is what I kind of, when people like, they're like, oh, the GameStop trade is over or whatever. I'm like, here's the last 2 years of GameStop. 2021, stock went from $17 to $483 to close at 148. Uh, 148.39. That's a volatile ass year, right? We're inside of that range. We're not breaking out in either direction. If this thing went all the way down to 17 and sold off, I'd say, you know what, maybe the trade's over. But at that point, you're talking about a company that would be trading for less than its cash balance. Like, that's the other thing you have to factor into the stock. They have cash and basically no debt, right? Now they've been spending cash, and it's like one of these things where we're in this weird place where we don't know if it's going to work yet or not. That's the risk of investing in GameStop right now. They need to turn a profit. The minute they turn a profit, you're going to see a short squeeze, just like what happened in Tesla. Tesla had this huge move up when they shipped the Model S back in 2013. It went from $26 to $75. It then spent the rest of that year kind of trading inside of that range, right? So we're going to see something very similar here, where if profitability appears in any of these quarters, be it quarter four, right, the Christmas quarter this year, or maybe Q1 next year, or Q3 next year, if GameStop starts putting out positive earnings per share numbers, it's going to cause a massive short squeeze because no one expects that right now. Not even me along. I expect them to continue to lose money throughout this year because they're spending on growth still. The question is, how much are they going to spend, and are they going to have to raise more money to do it? Because that will hurt the share price, right? Uh, and that's like we're in this, but we're in the muck, is what I'm saying. You look at this year's range, albeit extremely volatile, right? 77.58 a share to 199.41 a share is a wide ass range. it's still well inside of last year's range. So it's like the play here is honestly to sit here and do nothing. Because there is and even the stock, if you look at it, it's only down $13 for the year. After this volatile last year, it's not really down a whole lot. It's kind of just been sitting here doing nothing because we're waiting. We're waiting for the next actual what I think's neat about these kind of plays is 4 times a year we get actual information about how they're doing as a company, and the stock will react to it. So I think over time, if GameStop turns a profit, there's going to be a very volatile move to the upside. And then if they're able to put up, I think it's 4 straight quarters of profit, then they could get added to the S&P 500. That creates the need for more institutional ownership. We've actually seen a couple of hedge funds buy GameStop recently. Ray Dalio actually sold his Tesla position and bought GameStop and AMC for some reason, but he did buy GameStop. We've seen one of the owners of Pulte Homes, you know, that home builder. He's in this stock now, and he's tweeting about it quite a bit. So yeah, I think that like some people are starting to see what the players see, that there is a turnaround happening here, and we're willing to let GameStop turn it around before we judge it, you know. And I think like, yeah. So yeah, here's a good question from the chat. Johnny Chugs asks, in a society where almost every gaming platform has its own digital storefront, is GameStop surviving still important? Yes. Where are you buying the hardware?
Yeah, I
Like,
mean, not
where
only that, I mean, people still like physical retail fronts. People like to
there's
go shopping for things.
and like there's a digital divide in this country still, where some places have potato internet, like Canton, Ohio, and you want to buy the disc or the cartridge in the case of the Switch. On top of that, we can go back to, if you go into a GameStop, you look at what it looks like today. That ThinkGeek that they killed off, Blake, is alive and well in their stores. They're selling T-shirts, they're selling Funkos, they're selling all sorts of weird collectibles at GameStop. You know, um, as long as video game fans are geeks, I think there is going to be a need for a brick and mortar retail store. Do there need to be this many GameStops? Probably not. And they've been shutting down the non-performing stores for years. It's like
um,
that's a 10-year thing.
yeah, actually, that leads me to another question. So, speaking of shutting down stores, recently there was a GameStop where basically the entire staff walked out in protest and told people to go shop somewhere else and left a list of other
Yeah.
places they could shop. Which is interesting because, like, you know, our rhetorical evidence is very different. Like, the GameStop employees that, like, I chat with when I go to my local GameStop are they're very chipper, and they seem to be loving what they're doing, and like they're real gaming nerds. You know
Mm-hmm.
what I mean? And yeah, I asked them I asked them about that stuff too. Like, you know, like what's uh the corporate culture like now? You
I've
know,
asked them, is it different? I said, is it different? And they're like, yes. Ryan actually talks to us. Like, Ryan talks to the general managers of every store. Now, in the case of this Nebraska story, which I thought, you know, a lot of people gave Kotaku shit in the GameStop movement for covering that, and then we covered it too. Um, there's always a bad Denny's in town. There's a good Denny's and a bad Denny's, right?
oh,
So
let's
it
not go
stands
to
to
that
reason.
Denny's. Let's go to the good one over
Let's
on
go.
whatever.
Let's go to good Denny's, right? So in this Nebraska town, that was the bad GameStop. And there are managers who, you know, it's very likely that Nebraska GameStop is one of the underperforming stores, and they were given notice to the general manager to hit these metrics, or else your store will probably get closed down. Um, and that, from what I heard, most of the complaints of those workers were about the general manager, but the general manager's reaction to the mandate from corporate to become a better performing store. So I think the workers have every right in the world to walk out. I have no problem with that happening. And if that wakes up the company to a problem that was going on with that manager, good. Maybe that manager will get fired for mistreating their employees. I think we've seen a lot of companies where employees are speaking up and saying, "No, I'm not going to do this." We're also just seeing workers straight up quitting. They're calling this the Great Resignation era because people want to get paid more. Uh, I can tell you that the folks that I talk to who work in my GameStop, their biggest stress is being robbed. They get robbed at gunpoint way too often, right? And that's that. They've never really complained about their manager when it comes to that stuff. But like GameStops are soft targets, man. They really are. And it's a very small store most of the time. It's got to be scary if you're being robbed. But the one that used to be a Funko Land in town gets hit up. Like it's like once a month they get robbed. So like to me, there's bigger problems than a manager who sucks. Uh, but yeah, like I don't know that we've seen that story at a ton of companies this year and last year. We've seen Starbucks do the exact same thing, right? And now we're seeing Starbucks workers unionize, which I'm all for. I love seeing these stores unionize. Keep doing it. Apple employees, same thing. This you could have written the exact same story about an Apple store, you know?
Yeah.
Like Apple store employees, their general manager being given ridiculous benchmarks to hit, acting like a dick to employees. All that's going on at Apple right now. So I don't think that story was unique to GameStop. I do think that our colleagues in the games media are predisposed to covering GameStop in a negative manner. I think that they all do themselves a disservice when they call it a meme stock. They sound ignorant as hell because they don't understand how we got here. They think they see $9 billion market cap and they're like, well, that's too much. They don't understand how we got here. Like they just think meme stock. And same thing with the mainstream finance media. CNBC still calls it a meme stock. Reuters will sometimes call it a meme stock. I think everyone's doing a disservice in that front. Yeah,
Yeah.
TJ saying he bought PS5 directly from Sony. Yeah, sure. I'm not saying it's the only way to get hardware, but I'm saying in a world where hardware is still, you're going to have a hardware client to play this software, unless everyone's going to be playing Game Pass on Samsung TVs, which I'm not. You're going to need a place to buy things that are tangential to video game software. The whole argument about software at GameStop, software used to be 80% of sales. 80% of sales. It's now like 34% of sales. So that huge drawdown that we saw in the last 15 years, it's already happened. The blockbusterification of GameStop, where they used to make bank on used game sales, they're not anymore. And that was higher margin revenue than the new game. Like when they sell Mario Strikers, they don't really make a whole lot off of that. Maybe $5, you know? So I think that there's going to be demand for video game retail in general, in person for a while. And there's also like the parent that doesn't know anything about games that needs the help of someone. I still think that parent goes to GameStop. They don't, or they go online and they ask people. But with an online website like GameStop has, I think there's a chance that they could continue to exist as this like hybrid thing. But I get it. Yeah, like PlayStation wants to sell direct, good for them.
Yeah.
But I
And
haven't been able to buy a PS direct from that thing. It's like the freaking golden ticket in Willy Wonka. Like it's not very easy to secure a PS5 even through those means.
yeah, and I agree with what Rumpo is saying. Like, just ordering everything online gets really old, and isn't it all at all satisfying after a while? Like, I like to go and peruse. I like
Yeah,
to, yeah.
think about malls
Uh-huh.
specifically. You know,
Oh, dude, they're
most
so dying.
most mall purchases though are impulse buys. You're
Hmm.
walking by the store, you see something, you're like, oh, I'm gonna go in there and get that. So
Yeah,
like you're a kid and you're walking by a GameStop and they have a foam Minecraft sword that's in the window. You know what I mean? It's like stuff like that you're talking about. And yeah, I agree that the mall in America tends to be dying. Um, I do think there's like an impulse buy nature to some of the stuff that you buy when you're in a GameStop versus online.
Oh
And
yeah,
impulse buying doesn't feel as fun online. It just doesn't. Doesn't have the same like it you didn't find that thing. It wasn't like,
yeah.
"Oh, look what I scored today."
I
It's like,
mean, I like to go hunting for things. Like I go to like I not only go to like retro gaming stores and like use like toy stores and stuff like that and like thrift stores. Like I also just go to like the mall sometime, like the Sun Valley Mall in Concord or something like
mhm.
that, and I'll be like, oh, their little GameStop a lot of times has stuff that like you can't find anywhere else because it's sold out at the more apparent storefronts. You
So yeah,
know?
I want before we go because I know we only got like 6 minutes left before the dump starts, right?
Yeah.
We're you mentioned that we're in a bear market. The S&P 500 is in a bear market, right? Here's a good example of what that looks like. The peak of the S&P occurred on January 4th of this year. It was 4,818. The S&P closed today at 3,674. um yes, bear market. That's what it looks like.
So
You want to see some uglier let's look at some uglier stock charts. Uh Here is Zoom. Zoom peaked near 600 a share in in October of 2020. It's currently at 110. You're talking about down 75%, Blake.
that's insane.
S&P 500 down 20%. Zoom down 75%. Let's look at another one. I actually own this stock, Oatly. Oatly went public last year. They sell plant-based dairy alternatives, right? Oat milk, oat yogurt, oat ice cream, right? Stock peaked at almost 30 a share. It's currently trading for $3.75. You're talking about almost a 90% decline. So when everyone's like, "Oh, the bear market's here. The bear market's here. You have to sell." I'm looking at all these turds that are already down 90%. You know what I mean? Like it's been a rolling bear market is my point. They were called the pandemic stocks, right? Another one is Roku. Roku had a double top near 500 a share, currently trading for 82 a share. Another one of those down 75% stocks. Do I think Roku is doomed? No. I actually
Ah,
think Roku makes awesome products and they're probably going to have demand for a very long time. Why I bring up these stocks? These are secular stories that are going to happen for probably 10 years. Like this move away from dairy towards plant-based or away from meat towards plant-based. Like that's a very long-term thing. Yes, the pandemic caused this mania, right, of investing in the next big thing, right? Everything was the next big thing. Even Tesla. Look at Tesla since its high. Tesla hit a high last year of 1250. It's almost down 50%. You know what I'm saying? Like, so you
yeah,
have these stocks that are down materially from their all-time highs. That you can. What I'm telling people, I own more stocks today, individual stocks today, than I did a year ago during E5. I have
yeah,
put cash to work in the last year, and I am buying these. Here's another stock I own, and I don't mind giving people. This is free advice, and you don't have to invest in any of these things. Here's Teladoc. Teladoc is a telemedicine company, right? Webcam based doctor service. During the pandemic, peaked at 310 a share, crashed below 30. You're talking about down 90% already. That's beyond a bear market, Blake. This is kind of my point. There was a irrational exuberance in some of these stocks when they were valued in the 300s or 500 in the case of Roku, but there's almost the inverse happening right now where everyone's throwing these stocks out the window and there's actually some good deals down there. So, what I would say as we close, do your homework, find companies you believe in long-term stories of. If you're of our age or if you're younger, this is a great time to be investing. Stocks are on sale right now. I'm not telling you to go out and buy the S&P 500. I'd never do that. I buy individual stocks. But there is a opportunity in a company like I'm going to say it. I'm just going to say it, Blake. There's an opportunity in a company like Nintendo. Nintendo peaked at 82 back at the beginning of last year. It's basically been going down outside of one little respite for most of the past year and a half. At $52 a share, 4% dividend rate, Nintendo proved to us during the pandemic just how valuable they are. People turned to Animal Crossing and the Switch during the height of the pandemic. It showed
Yeah.
you in a time of panic just how valuable their brand is, right? So I think right now is a great time to buy Nintendo. I already own it, so I'm not rushing out there to buy it, but just look at that chart. I think
Yeah.
$52 is a great price to start entering it, and you can keep adding to it if it goes lower. If this market continues to sell off, because my point, and we can end this here, my point is that stocks that all move together, like when correlation goes to one, not every company should be going down because of inflation. Some companies benefit from inflation. Nintendo, for instance, they like a weak yen. They're going to beat their revenue numbers because they have a very low yen assumption rate. And if the dollar continues to strengthen against the yen, they're going to have a revenue beat just from the currency tailwinds. You know what I mean? So not every stock should be selling off because of inflation. Not every one. Some of these companies are going to benefit from inflation. Some of these companies will have no effect from inflation. Some of these companies are raising prices to counter it. Seeing that with Apple, right? Or Tesla. Tesla keeps raising prices on their vehicles. And hell, there's probably more demand for Teslas right now because of where gas prices are, right? So it's like inflation in that case has actually increased demand for their vehicles or electric vehicles in general. So I think that when correlation goes to one, there's usually opportunities there. I'm going to throw out two more picks real quick. Here's a chart of U.S. Steel, currently trading at like 0.6 times book value. This is a boring ass company, but if we are in this world where we're moving away from China making commodities for us, U.S. Steel is probably going to benefit from that. And they just told us yesterday that they're expecting their best Q2 ever. They just told us that yesterday. Another stock that I think is kind of interesting is Citigroup, also trading at a discount to its book value, and a company that benefits from inflation. How do they benefit from inflation? I talked about the risk-free rate of return going up. These banks make money off of lending money. If their interest rates that they're lending at are going up and the cost that they're borrowing at is remaining flat or a little bit higher, their net interest margin is going to go up. They're going to become more profitable. And these aren't the same banks that we had in 2008. They're all very well capitalized, and they own a shit ton of the real estate in America. So it's like buying. Citi's an international play too, and I think some of the issues with their stock have to do with Russia. But yeah, I just think Citi is interesting. I think X is interesting. U.S. Steel is interesting, and I think the biotech sector in general, for people our age, you want to talk about the next 30 years where we're going to see the most innovation, healthcare. I think specifically biotechnology. So if you don't want to pick individual biotech stocks, I don't blame you. You can invest in XBI, which is an ETF, or I think there's IBB is also one. But yeah, here's an example of this, Blake. You have the entire sector of the biotech industry is down almost 66%. And it hit a high. You'll notice that a lot of these stocks I'm pointing to or sectors I'm pointing to, Blake, they peaked almost a year ago, a year and a half ago.
Yeah.
And they've been selling off for a while. The S&P is like a lagging indicator in this case. The S&P peaked this year. A lot of these stocks that I'm looking at peaked almost 16 months ago. So I think there's opportunities there for patient investors. Don't buy everything all at once. Do dollar cost averaging. Say I want to own X amount of dollars of Nintendo. And then you buy a third of it at a time, because no one can time the market perfectly. But you can do your homework, pay attention to the technicals and the fundamentals, stay on the stock, know when they're reporting earnings, know when they're having their shareholder meetings. And that's one thing that I think the GameStop movement has done an amazing job at. It has taught people how to be an investor. And I think that's great. I think that what Keith Gill's story is, the Roaring Kitty, Deep fucking value. His story is about an individual investor who took a calculated risk and became a millionaire. That is why people are so inspired by that thing. That's why there's so many people investing in stocks now that weren't in the past. They're like, everyone wants to be the next Keith Gill.
Yeah.
Not everyone can be, but it's good that people are willing to take control of their financial future. I think that's a good thing, and I think this movement has been empowering for a large amount of people. And anyone who calls us meme stock investors, you got two double middle fingers from me because you don't know shit. You don't know anything about what is actually happening in this market.
Well, on that cheerful note, Asif, I would like to thank you for espousing wisdom for us for the last hour. Um, yeah, you talk a lot about stonks, not only on Shacknews.com but on your Twitter page as well.
Yeah, my Twitter page is I don't know how to describe it. I tweet pictures of pets. I talk about all sorts of sports. And yes, during the day while the market's open, you may get some financial stuff from me. It's been weird being like the hammer on this GameStop story for over a year now. But yeah, like I consider Shack News to be the leading source of fair reporting on GameStop. Uh, we report on their bullshit, like what happened in Nebraska, but at the same time, we report on their earnings. We report on the short interest. Who is this guy? I'm Asif Khan. I own Shack News, and I'm a GameStop shareholder. I'm an Apple shareholder. I made most of my money in Apple. Then I made some more money in Tesla. Then I made some more money in Nintendo, and now I'm here to bring down the stock market with GameStop. And I hope you'll join me.
All right. Well, I have also invested in GME at this point, so to the moon, Asif. Let's do it. We're gonna take a quick break, and then we're coming back with a very special edition of the dump. Asif, you're sticking around for the dump, right?
Yeah,
All right, sweet. Well, yeah, I just need a few minutes to get everything ready in the background and bring everybody in. In the meantime, enjoy this special clip from a past broadcast starring our one and only Sam Chandler and his mates battling through Destiny 2.
love it.
Love it. Here we go. We'll be right back.